All right, welcome back. We are still looking at smart rally in the markets, but as time is passing by, probably some amount of nervousness is setting in, and that's why for over 120 points gain on the Sensex, now we are staring at just about 98 points. But the broader markets are performing today. Last week we saw big cuts coming in the broader market, 4 and 6% respectively for mid-cap and the small-cap index. But today they are up and about. Another sector which deserves some attention is the capital goods sector. Increasingly we are seeing more buy reports coming in the capital goods sector. It's interest rate sensitive, and the stocks have started performing, led by, of course, the large cap. However, there's a small cap or a mid cap capital goods stock, Blue Stars, which deserves some attention. Mr. B. Tyagarajan joins us on the show today. So we understand that UBS is very bullish on your stock and has a target of 210. It goes on and call Blue Star as the top pick in the space. Tell us how the economic environment has been faring past couple of months, and how does the future look? Because we understand from large companies in your sector that the demand is still not very robust.
Good morning. Thank you for talking to us. There is good news as well as bad news. The good news is the residential and small commercial, or what we call as light commercial, shops, showrooms, boutiques, this part of it is doing well. We expect the market to grow anything between 10 to 15% in light commercial segment and close to 15% in residential segment. We are well prepared for it. The whole industry is well prepared for that. And as far as the large infrastructure projects are concerned, it is yet to take off. As of now, the activity is very bad. The projects are delayed. The new projects are not getting off the ground. So we do have a concern in the large infra projects.
Going forward, what is it that you're factoring in terms of overall growth numbers for sales and profits as well?
At least it should be 10%, a minimum of 10% growth in the top line and bottom line we should be aiming at in the coming financial year.
So tell us, how's the pricing scenario in this light, in the kind of demand which you outlined? How's the pricing scenario panning out versus your costs? Do you think there is some scope for rationalizing pricing in order to stimulate demand?
In the commercial segment, the prices are very stable. In the residential segment, as it always happens, it will depend entirely on the summer season, how it is going to open up. In the western India and central India, it is opening up, and we do not see a price war happening. By chance, if there are going to be rains and the demand is not picking up, prices will start falling. As of now, the hope is the prices will be stable, margins will be maintained at least till end of summer. We have to watch how the exchange rate is going to move. If rupee is going to weaken, it will have an impact on the margins.
But on the other side, if it is expected to appreciate, which now more or less is the consensus emerging, especially after some steps from the government, does that mean that your margins get inflated? Also tell us, are you negotiating some mid-size or reasonably sized contracts in the industrial segment? If yes, give us a color on that. The room air conditioner business in the summer season is equivalent to T20 cricket. It has to be played in the next 45 days well. If the rupee appreciates or depreciates, I do not think the room air conditioner margins are going to be affected in any manner at all. We will be very happy if the prices are stable. The growth happens around 15%. The industry is well set. We are well prepared, and the game will go on. Especially after 2 years of degrowth, we are expected to do well there. As far as commercial segment is concerned, there are quite a few orders, specifically the metro railway related. Some large commercial projects are happening, and I do hope that the degrowth that set off 2-3 years ago, it stabilizes, and we can look forward to some kind of marginal growth in FY14. That is the expectation of ours.
Are you looking at investing any bit in expanding business at this point in time? Any capex plans that you may have?
In FY14, it will be a marginal capex to balance out the manufacturing related. But as I had stated earlier, by December 2014, we have to think about investing in a large manufacturing facility somewhere. There has been speculation it will be in south or west or wherever it is. We have not frozen, but we will be setting up a large manufacturing facility for room air conditioners because we are growing there. The other business that is growing for us is the deep freezers and water coolers, or what we call as the refrigeration products, and there again some kind of expansion and investment will take place, but not in FY14.
Okay, Mr. Tyagarajan, we leave it at that. Thanks very much for joining us and giving us your perspective on your business. Appreciate your time this morning. Let's also quickly